Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous?
Good morning and welcome to Modern Investing Techniques, episode 113. Today is July 21st, 2026. I'm Patrick, broadcasting from Vancouver. Time to break down today's market setup and find our edge. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. Tariff threats are forcing Canadian premiers to accelerate domestic trade deals, opening a window for TFSA investors to rotate into interprovincial supply chain names before broader market pricing catches up. The S&P 500 closed at 7,443, down 0.2%. The NASDAQ Composite finished at 25,508, essentially flat. The TSX Composite closed at 34,960, down 0.9%. Global shares recovered with technology leading in South Korea and Japan after prior AI-linked selling. GM posted an earnings beat and raised guidance, which signals resilient auto demand even as tariff rhetoric escalates. Earnings season continues with financials and consumer names reporting this week. No Bank of Canada decision is scheduled before month end, so rate expectations remain anchored near current levels. Our simulated portfolio shows a matched window alpha of plus 6.59% across 37 benchmark trades against the NASDAQ Composite. That figure compounds over each trade's own holding window. The two-stage TFSA RRSP arbitrage exploits the fact that RRSP contributions generate larger tax refunds when made in higher marginal brackets, while TFSA room can be preserved for later, lower bracket years. With fast-growing incomes common among mid-career Canadians, the approach involves maxing RRSP contributions in peak earning years, then shifting future savings into the TFSA once income and the refund value drop. Implementation requires tracking adjusted cost base across both accounts and using a tax planning spreadsheet or Wealthsimple Tax to model the refund differential each year. The strategy has historically added 1 to 2 percentage points of after-tax compounding for investors whose income crosses brackets multiple times over a decade. Risk lies in over-contributing to the RRSP and facing withdrawal taxes if cash needs arise before retirement. If you want to test this in your own accounts, start by running last year's numbers through a simple spreadsheet that compares the marginal rate at contribution versus the expected rate at withdrawal. That same discipline of waiting for confirmation shows up in our practice investment of the day. This is a simulated trade for educational purposes only. No real money is involved. Today's pick is Bitcoin on the crypto market using a technical breakout attempt from a 1-month range on rising momentum. The hold runs Monday through Friday. Bitcoin cleared local resistance above $66,000, with predictions of further upside if momentum holds. Price action shows a range breakout above prior highs. Nearest resistance sits near $67,000, while support rests at the breakout level around $65,000. Volume confirmation is required before treating the move as sustained. The stop loss sits at $64,500. Limiting downside to roughly 3% from entry. The target is plus 2 to 5% over the week if the breakout follows through. Confidence is medium because the breakout attempt is clear but lacks a volume spike above the 20-day average. This setup demonstrates how to define entry and exit levels using only price structure and volume rather than fundamentals. Listeners learn to wait for the actual break rather than anticipating it. Yesterday's trade review shows no newly closed trades since the last review. The most recent practice investment has already been reviewed. Current holdings remain open and pending their scheduled evaluation. On the tools and techniques side, the Polymarket prediction market platform aggregates crowdsourced probabilities on events such as tariff announcements or earnings outcomes. Individual investors can use the implied odds as a real-time sentiment gauge to cross-check traditional analyst forecasts before entering positions. Access is free via the web or app. Start with small positions on high-liquidity contracts only. The London Stock Exchange non-stop trading venue will offer near-continuous trading starting next year. This allows Canadian investors holding US or international names to manage overnight gaps without waiting for regular hours. This reduces the risk of weekend or holiday surprises for those using multi-asset portfolios. Monitor LSE announcements for exact launch timing and eligible symbols. In quick hits, GM reported stronger than expected adjusted earnings and lifted full-year guidance. Pricing power remains intact despite higher input costs. Add GM to the industrials watch list and consider a small TFSA starter position on any pullback below the 50-day moving average. Kraft Heinz stock rose on a multi-year Disney supply partnership that provides visible revenue visibility for the coming years. Review Kraft Heinz position sizing in consumer staples exposure and add to the rebalancing list if the stock dips below recent support. Singapore leads record foreign investments in Southeast Asia as supply chain shifts continue to favor the region. Consider adding a small allocation to an Asia ex-Japan ETF on any broad market weakness this week. Nibia stock surged as NVIDIA disclosed a 9.3% stake. NVIDIA's prior $2 billion commitment highlights continued capital flow into specialized cloud infrastructure. Place Nebius on the growth watch list, but wait for volume confirmation above the 20-day average before any entry. Portfolio performance shows 42 total trades with a 55% win rate. That breaks down to 23 wins, 18 losses, and 1 break-even. Cumulative P&L stands at $266.87 on $1,000 simulated positions. Average return per trade is 0.64%. The best trade reached plus 20.11%, while the worst came in at minus 11.80%. The current streak sits at 2 losses. Our AI analysis is learning from recent patterns and adjusting position sizing accordingly. Now here is something most retail investors get wrong, and it cost me money before I figured it out. Imagine you bought a TSX-listed industrial name last week after it bounced from the 200-day moving average on heavy volume. Your order filled at the ask, yet the next candle closed below that average because the 50-day line was already sloping downward. The mechanism here is simple. Support levels only hold when volume exceeds the 20-day average and RSI 14 stays above 40. Otherwise, the bounce is a liquidity grab. Professionals always check the slope of the 50-day versus the 200-day before treating any test as valid. The biggest mistake retail traders make is treating every support touch as an automatic buy. Instead, always require both a volume spike and RSI confirmation before entering. Before we wrap, open your brokerage platform tomorrow and check the 14-day RSI on Bitcoin to decide where to set your price alert. That wraps up today's modern investing techniques. Remember, every trade is a learning opportunity, win or lose. Subscribe, share with a friend who wants to invest smarter, and we'll see you tomorrow. And if you'd rather watch than listen, find us on YouTube at NARA Network. Links in the show notes. One more thing, if you liked today's episode, our sister show, First Principles Daily, is worth a spot in your feed. Reasoning from raw materials, not analogy, on the breakthroughs that actually cut cost. It's one of the NARA Network's daily briefings, all free at naranetwork.com. The Do Positive Pod is the club for people who do something about it. Episodes and the dispatch wall at naranetwork.com/thedppod. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up up in the past? Are you still thinking about all